Hello, today we're going to take a look at the UK economy and the UK equity market, given events in recent days, recent weeks regarding the political situation in the UK that for many investors has reduced the risk profile of the UK. And with sterling and the UK equities well below their long-term averages in terms of valuations, what is the scale of the opportunity? Well, the first thing to say is the UK equity market has really been out of love from an international investor's perspective for more than 3.5 years since the EU referendum in June 2016. And that has led to a valuation benchmark about 15 to 20% below global equities. For value investors looking at a global equity market that is fairly keenly priced, and we're seeing all-time highs on the S&P, on the Dow Jones, there is an opportunity for a developed market that has been out of favour that might attract somewhat of a bid as a result of reduced political uncertainty. Added to that is the fact that sterling, currently trading around the 120 level against the euro and around 130 against the dollar, is also below its long-term purchasing price parity level. And therefore, with the anticipation that you have political clarity now set in the UK for the next 5 years, then will we see some retracement? I think that's an entirely reasonable expectation. Has to be said, the UK economy isn't completely out of the woods, and therefore it isn't an easy one-way bet. There is still some very difficult stage 2 negotiations to follow between the UK and the European Union after the UK leaves the bloc on almost certainly on the 31st of January. Those negotiations, which are penciled in to last for most of 2020, will be fractious, will be difficult as the UK and the EU try and establish their new long-term relationship. And therefore, there will still be some political uncertainty to price in on how those will evolve and whether the divergence that the UK may see from its long-term regulatory alignment to the EU will mean some risk continues to be priced in. And I think that's entirely plausible. The second reason, of course, is that UK growth has been somewhat disappointing in 2019, and heading into 2020 with a growth rate running at below or around 1%, can we see a material uptick? Our expectation is that growth will tick back up to 1.5%, but that is still below, on an annualised level, the 2% that the UK economy has achieved over the last 20 years. So in order to sort of sum up the outlook for UK assets, political risk has certainly diminished with a significant Conservative majority achieved in the recent general election. Sterling, UK equities are undervalued versus their long-term average, and while there are still challenges to come, we still see a significant advantage to be gathered by investors on going overweight a position on UK assets that they've been underweight since 2016.